You're listening to Out of the Box, a place for marketers to get inspired, get going, and break out of the box.
Welcome back, everyone. I'm Jess Overton. You're listening to Out of the Box, the marketing podcast exploring out-of-the-box approaches to marketing and growth. Today, I'm joined by Trang Dao, VP of Growth at Adam Finance. Trang, thanks for joining us.
Thanks for having me.
An absolute pleasure. So before we really get into the bits and bytes of what we're going to talk about today, you've had a pretty colored career, starting in pretty hardcore finance and hedge funds, moving into tech, and then finally finding your way back towards Wall Street with Adam Finance. Give us a little bit more on your history and your career path.
Yeah, it's true. I did come sort of full circle. So I spent the first 5 years of my career in finance, where I worked in structured credit and then at a hedge fund. That was before, during, and after the Great Recession. So very eventful time for me there. I decided to make a career switch, and I moved into startups. So my first role was at Kayak. I was there for about 5 years, working in marketing, and since then I've really just stayed in the last decade in growth and marketing at a bunch of startups, including Casper, ZocDoc, Greenlight Debit Card, Meal Kit, Hungry Root, and now I'm back in finance at Adam.
Super cool. So I've got a whole bunch of questions because you've covered so many different industries, and I'm sure that we'll get back to all the marketing tactics you've learned across those different spheres. But before I guess we really dive in, what about Adam Finance? What do you guys do? What differentiates you in the fintech field? Tell us a little bit more about the organization.
Yeah, sure. So we launched in 2019, so we're still relatively new as a consumer software platform, and we provide institutional quality investment resources to individual investors. So I know that's a bit of a handful, but you want to think of it as like, fintech is definitely a really crowded space, but we're not a brokerage, and we very much operate in a white space, right? So we address the massive information gap between professional solutions such as the Bloomberg terminal, CapIQ. These are things professionals use that cost about $20,000 a year. And on the consumer retail side, where there's really just Yahoo and Google Finance. So we sit squarely in the middle of that. As a consumer, when you create an Adam account, you can follow stocks, link your brokerage accounts, and then we build a fully customized personal experience for you based on your portfolio that includes all the relevant information: breaking news alerts, 3 times a day market briefings, benchmarking, street consensus estimates, screening, filings, transcripts, like you name it, we have it. So we cover the entire gamut of necessary investment research tools.
And you said that you guys got started in 2019. I mean, that's pretty fortuitous timing, right? I mean, I think over the course of this past year, some 10 million or more new online brokerage accounts have been created. So how have you guys been seeing that growth, and what's really been driving that growth, and how do you guys fit into that?
Yeah, I mean, you're right. So I think over the last few years, we definitely have seen a boom in individual trading because of a lot of the commission-free brokerages that have popped up in the landscape. They've changed the way that people access the markets. And then on top of that, this year, the pandemic, staying at home, all the increased volatility in the markets just really accelerated the trend. So we definitely have a world now where retail and individual investors expect really easy access to the market, and the focus on I think unfortunately is on where you can make the cheapest, most convenient trades. So this is where we come in, and this is why Adam exists, right? So our principles are that access to the market should be accompanied with access to quality data and information. So if investors can access the same markets that professionals can access, then it only makes sense that they should also be armed with the same tools, the intelligence that the professionals have, because that's really the only way that you can make smart, informed investing decisions. And, it's really the only way that the playing field is leveled.
Right. So you mentioned that really your competition is the Bloomberg terminal, right? If you take the Bloomberg terminal is really the pinnacle of investment resources, and on the other side we've got Yahoo or other types of app like that, but they're really pretty bare bones.
Yeah, that's correct. And it's been a tricky, at least for me, just marketing and messaging. It has been kind of tricky because, Yahoo and Bloomberg, I think, are just sort of the analogies on the complete opposite sides of the spectrum of what we build, right? We aren't, we don't necessarily have the same offering. What we do is we take the best from both, and build it for the individual investor. And so, yes, like Bloomberg is has been around for a couple, like a very long time. It literally launched as a piece of hardware. Like that's how old it is, and it's a very powerful tool that the professionals use. But even still, a lot of our founders, as you know, like I worked in finance, like it still didn't offer a complete package of what you would need. Like you still rely on a bunch of other tools. So we sort of take the best of Bloomberg and all the professional tools. We take the best of the consumer platforms, which is a user friendly interface that's available in the app, and then we combined it into one product.
Gotcha. So you talked a little bit about building your message around this sort of stuff, and there's so much information these days, and there's so much that we can consume all of the time. And in the days of Davey Day Trader giving his opinions on what we should be buying or selling, or Elon Musk tweeting that the stock is too high and it tanking 10%. How do you craft a message that really gives consumers or potential traders or whatever you might call them, the confidence and the knowledge that they need your product, that their product is going to help them?
Yeah, so that very much has been our challenge, right? Because I think so again, you have expensive professional tools such as Bloomberg, and for the most part, if you're a professional, you don't really need a lot of guidance. You really know what you're going to Bloomberg for, and you really know, what information you need from it. And then on the consumer side, you have a bunch of investing advice sites like Motley, Seeking Alpha, and a bunch of other, fragmented content sites, Reddit threads, and things like that. And those are all noisy and not necessarily as raw and powerful and database, right? Because those are very much advice sites. And so for us, a lot of the challenge has been tapping into trying to tap into our the individual investors who understand that all of the advice they get should be grounded in research. And so a lot of our
Hmm.
messaging is we have this is like the powerful knowledge platform, right? Like knowledge is power. We are making sure that all investors have equal access to the same raw data and research as the professional investor. So our offering is not advice sites, right? Our offering is actually we have Wall Street analyst estimates, we have equity research reporting, we have premium news content that actually covers like real market movements and corporate decision making and things like that, right? We are very much not like that this is Jim Cramer's like top 5 stocks of the day or something like that. And so
Yeah.
we've really had to work hard to carve a space for ourselves where it's like, hey, obviously on the retail side there's a lot of activity, like there's a lot of people who are excited about trying to find the hot stocks and things like that. But, like it's really important that you do your research, right? I think we've seen, some pretty tragic examples of what happens when the information is limited or when the information is oversimplified, and people can make reckless decisions, or not reckless, but really more uninformed decisions just because the data wasn't available to them for them to consume.
Absolutely. I've heard of a bunch of stories along those lines, and it can end quite tragically. We have a lot of experience in marketing in the app ecosystem in the East. If we look to places like Indonesia or China, where they have what you might call super apps, right? If we look at things like Grab or Gojek or WeChat, which incorporate a huge amount of different functionalities within the fintech space. Do you see the potential of bundling these things together? Whether it be in partnership or any other format.
Yeah, consolidation does feel inevitable, right? Because it does seem to be the natural trajectory of business, and also just, defines the motivation of business. I think we are likely to see it happen in the West, but it's too early to say. I think for fintech, what we'll see in that industry, I'll certainly stay tuned to see how things unfold. But I think if this year has taught us anything, it's just things can swing dramatically and change pretty quickly, and uh, we just have to be prepared for whatever happens.
Absolutely. So I want to double click on this year. So you mentioned the year that has been, and obviously it's been pretty eventful, to say the least. What are the main markers, or what are you taking from the year 2020 for fintech?
So I do think, so obviously with the pandemic, we saw the, record levels of individual trading activity. I think at Atom, we saw record growth, like record engagement, all that business. And I think um, we sort of touched on this before, and I think in what we can expect is that because this year we've seen a lot more speculative, riskier retail investor behavior, and because we know that it can be quite treacherous, we do see these investors beginning to recognize that simplification of information or limited information is just not sufficient. And hopefully, in the brokerage and trading spaces, we'll see a reckoning that it's not just about cheap and convenient access to the markets, but also about access to research and information, right? So, I think for us, the speed of which interest in this space has accelerated this year has hopefully launched us even closer to achieving our mission, right? Which is just making sure that everyone understands that the right research, the right data, the right tools are necessary if you really want to be smart with markets.
Absolutely. Well, I'm going to come back to your predictions about 2021, because I definitely want to hear what you think is going to happen next year. But I guess before we get into that, you mentioned a bunch of different channels where people can already get market insights, and they seem to me like they would be pretty good fits, perhaps for your marketing strategy. So, tell me a little bit more about which channels you've been focusing on to acquire users, and what's been working for you.
Yeah, sure. So we are a startup, so our channel mix changes pretty regularly according to the resources we have and our short to medium term objectives. In the beginning, it was a pretty standard playbook. We leaned heavily in a digital focused DR strategy that balanced reach and efficiency. So we relied on paid and organic social for growth, right? Because we're a new brand, these channels really helped us explain our purpose and engage in a one-to-one manner with our customers. We also launched really early on paid search on web and the app stores just so that we could hit like high intent seasoned investors who are specifically searching for our features and tools. I'd say over the last few months, as our brand equity has increased, we've been able to secure partnerships with affiliates, influencers, podcasters. We run on content sites, so relevant wealth management and like investing sites to tell our story and articulate our mission. I'd say today it's a pretty balanced mix of core channels. Aura is obviously one of them. We're constantly just on. Um, Currently, we're just in a mode where we're just on the lookout to test for new growth opportunities, and we're not as established as larger companies, so we're just regularly looking for pockets of opportunity and like emerging untested channels to balance out what we have in our core channel mix.
So tell me a little bit more about that. How do you approach a new channel? How do you evaluate a channel? How do you measure its performance?
Yeah, it's pretty. I guess relying on my finance background, it's pretty formulaic and it's pretty performance based. So like in terms of channel specific performance, in the beginning, because our acquisition mix was simpler, it was a straight last touch attribution measured by our analytics tools and our mobile measurement partners. Over the next several months, we'll shift to a combination of a multi touch attribution program coupled with periodic channel specific incrementality test. I tend to take more of like an art versus science approach to measuring return per channel, just because it's unique to every company and like every channel. um, but yeah, it is pretty playbook like performance based.
Gotcha. Um, Incrementality testing has been a big buzzword around our offices recently. Tell me a little bit more about how you guys are looking into incrementality.
Yeah, so I think I was really lucky when I started out my first job in marketing in Kayak 10 years ago, because the entire digital marketing ecosystem was really really changing a lot, right? So programmatic media was brand new, and my boss and the CEO at the time were very skeptical of any digital medium aside from paid search. So I'd say I spent probably the first year and a half of my time there just perfecting the lift and incrementality test, and that's what we apply here. But it really is just making sure that every quarter, or twice a year, or however, you actually run a specific holdout test. Or sorry, you actually run a holdout group for whatever channel that you're running, for a duration of time. And then I just measure like the lift above that, and then apply that as a discount to like my CPA. I don't know if that
Hmm.
that makes sense, but
Yeah.
again, it's pretty rigid. It's just like making sure there are like clean holdout groups, making sure that like you're tracking their performance, and then benchmarking it against like what you're seeing, and then subtracting that performance from what you get from your like exposed campaign groups.
Well, I see. We've gone towards the scientist and away from the artist in you when it comes to incrementality testing. I definitely feel that finance background coming through. Um, Tell me something about the mix of users that you guys are trying to acquire, because you mentioned in your early days when you were looking at paid search that you were targeting, or you were acquiring savvier users that knew what they were looking for, and that wanted richer information about their portfolio. But I imagine that a huge portion of your users are millennials, or even Gen Z, who are getting getting investment advice on TikTok. So how do you position yourself, and how do you build that messaging?
Yeah, that is a really good question because it's really easy for digitally native companies to find millennials and Gen Z, right? Because the digital space is very much their playground. And as you've understood, when we think about our users, what we focus on more is on psychographic over demographic targeting, just because it is not our mission to teach investing to our users, right? It is our mission to make sure that those who have an interest in fundamental and technical analysis of investing um, have the access to the right information to do that. So I think this role has been a bit more unique for me compared to others because, I've like my previous roles have all been mostly in the consumer space, and it is a lot of sort of like, demographic targeting and like, like geo targeting and all that. And like here, what I've done, it's just like mostly like interest-based and psychographic and like motivational behaviors, right? Like we're very much just trying to find somebody, or the folks who demonstrate that they are willing or open to doing the research, and making sure that like their investments are like well informed and that kind of thing. So I'm not sure if I answered your question actually, because I started to ramble. Was that what was your question again?
I don't think you answered my question exactly, but we got into a super interesting space. So my question was actually around how you differentiate your marketing strategies for millennial users or Gen Z users versus an older demographic who are not necessarily as tech savvy as the younger generations.
I see. Yes. Yeah. So actually, what we found is like, the messaging that we test across the demographics, and this is limited because we've only been able to really test this on Facebook, but it's really versus other consumer companies where like. We know that like Gen Z like tends to be a lot more skeptical, and really values like trust in companies and that kind of thing, right? Like the research says that. We know that millennials like tend to be like very saturated with media, and it's more about finding the message that is going to shine above the others, because like they're constantly being attacked by ads and that sort of thing. But like
Hmm.
for us, like it's just been like pretty straight, and I think because like our product and our platform is so um the use case is so clear. Like for us, it's just been like we have the same message, and it works really well, like regardless of demographic. And I think it is because like as long as we're hitting the folks who are interested in a deeper level of analysis for investing, it works. And that's really it really hasn't gotten much more complicated than that.
Interesting. I having worked on both sides of consumer and and more in the finance world for where you are now, it seems to me that there's a lot to learn from both sides, right? So if you look at a company like Casper working D2C, I imagine that there are strategies there that the finance world could only dream of, and vice versa. Can you tell me a little bit about the main growth lessons that you've learned and how you're applying them today at Adam?
Yeah, sure. So Um, Casper was an amazing experience when I was there because I joined when they were just under a year old, and I came from kayak, which was pretty performance based. And kayak had a very strong brand, but like it was a balance of brand and performance. And Casper, in its first few years, was very heavily brand. I'd say skewed more towards brand than towards performance. And they built their company really on this like new sleep lifestyle, aspirational. Um, Message and positioning. And I think that very much is also what we're building here at Adam, right? So Adam is, I don't know if you've used the interface or taken a look, but like, that you can tell with the colors that it is like, it is sleek, it is aspirational, it is sophisticated, it is more highbrow and that sort of thing. Because, when you look at the other consumer fintech brands, they do tend to be, um, friendly, colorful. Again, like pairing with the movement over the last few years of like greater access to the markets. Like it should be easy for you to access the markets, that kind of thing. And
Hmm.
so we are very much trying to make sure that our brand and our positioning align, relative to the rest of the market, and also like align with what we're trying to say, which is like, again, like, yes, everyone should access the markets. That's super fair. But like that shouldn't come without like the right work and the right information, the right data. Like you should be informed, like you should be like the best informed investor in the room, that sort of thing.
Absolutely. And so, what would you say is the main lesson that you've learned about growth or user acquisition in your time at Adam?
The main lesson, it's kind of the same lesson I learned over and over, no matter what industry, but at every startup, right? Which is like, at early stage startups, we have the luxury of being really nimble. We can make quick decisions and we can try out and reverse new ideas really quickly. It's really important to make sure you're not overthinking and overanalyzing every decision because, if something doesn't work out, we can easily change course and take feedback and just keep moving. And so I think it's always like a lesson to just make sure to be very open to change and experimentation, right? I've been in previous roles, I've been at places where there's a lot of like hemming and hawing and like over modeling, scenario planning, and limited action taking. And here at Adam, we're definitely not that. And I think with what's happened in the world and the uncertainty over the last, I don't know, has it been 6 months now? Like I think like we've definitely had to like move fast, make fast decisions, and it's all worked out for us. But like the appetite for sort of change and risk definitely has to be there.
Yeah, for sure. I get we didn't really touch on the size of your team, but give us a little bit of insight on who's there, who is marketing at Adam.
Marketing right now is actually a team of one, so it's me. So
Amazing.
we are a still pretty lean team. I am hiring pretty aggressively. So if you know if anyone knows someone, please send them our way. But yeah, I mean we are we're a year and a half, and I work with a couple of agencies and contractors from like previous roles.
Gotcha. And well, that must be a real challenge then, to be always on top of so many different channels and on top of so much data all the time. But I guess that finance background is really serving you well.
Yeah, you know what? I never thought about that, but you're right. I think once you go through the grind of working at in a place like where I've worked in the past in finance, it is relatively it just kind of gets ingrained in you.
Yeah, it's an easier transition, perhaps.
Yeah.
So I said earlier that I wanted to get an idea of what you saw in fintech for 2021. I've given you a couple of minutes to think about it, though I've been asking you questions all the way through. So tell us, what do you see in 2021?
Yeah, I have to take it back to, I think, what we brushed on before, which is, I think we will start to see a lot of repercussions and, just ripple effects of, the huge influx of individual trading, and all the, commission-free brokerages, right? Like it's all sort of been building up over the last like 3 or 5 years or so. And I think this year it just really, really, you know, really just all the energy just went into that space. And so I think in the next year or so, we'll see, hopefully we'll see why Adam exists, right? Which is, it's imbalanced to grant such access to the markets without also distributing the information necessary.
Absolutely. Well, that sounds like a pretty good prediction to me. I was reading yesterday that Robinhood is looking at an IPO, and I thought that might be the inflection point for finance. It's just too meta for me to understand. Investors investing in Robinhood on Robinhood, it was just too much for me to handle.
Yeah.
Well, Trang, thank you very much. This has been super insightful, and I'm sure that our listeners will take a lot from all of your experience. It's been a pleasure to have you on the show.
Great. Yeah, I was happy to be here. Thanks so much for having me.
Thank you very much.